And our first guest this week joins us via satellite from Denver. Mr. Don Prosser is the CEO of ARET Industries. Their stock symbol's ARET. Don, welcome to the program.
Hey, Don, how are you? We're excited to be here.
Well, we're excited to have you. Now, ARET Industries describes itself as a company which has recently completed the purchase of oil and gas properties in the Rocky Mountain region of the U.S. Can you give us a general overview of the company?
Yes, of course. We own a pipeline in Wyoming, and as part of that, we started looking for properties several years ago. And in the last year, we were able to put together a package with our operator to amass 37,000 some acres and purchase that in, effective April 1st of this year. We're really excited about the upside and the opportunity, and so we've kind of moved ourselves into the E&P, and that's where we wanted to be anyway. And I'm excited about building this business from here. So.
Well, Don, this acquisition was something like an $11 million deal. How many barrels per day are your initial production estimates?
Well, the property that we bought had about 168 barrels a day, 37,000 acres gross, and we were looking more as much at the development opportunity as we were the barrels per day. And part of that situation, we, in our strategy, decided we looked at a piece that we could sell off, and there was 7,700 acres that we could sell off for about a double profit. We paid $2.48 million for it and sold it for $5 million and change. Helped us pay some of our debt down, and we only lost 18 barrels out of that deal. We kept a royalty interest in it, and so we feel like down the road there's a place to get back in, plus all the royalties if they do the drilling that they tell us they're going to do and de-risk that area.
Well, now, Don, the company recorded record revenues for your third quarter. What was behind management's decision to move into oil production?
Well, twofold. The gas prices these days are terrible, and so our pipeline was not performing as well as we would have liked. But in addition to that, we've always wanted to move into the E&P sector, and I was able to then have ongoing production, which is the first piece of our strategy, and then we sold off a piece of the acreage, as I spoke about a minute ago, which got us a profit and got some of our equity built. So our decision was really around starting to implement our strategy that we put in place several years ago.
Again, the company's ARET Industries. Their stock symbol's ARET. Don, tell us about some of the oil properties you've acquired. For example, how many acres, how many wells?
At this point, after the sale, we have somewhere around a little under 30,000 gross acres and about 15,000 to 17,000 net. We have essentially 78 wells. Most of them hold the leases, and we're producing around 150 barrels a day, and that's BOE because we have some gas production there. We are planning to do some drilling and further this property.
My first job out of college many years ago was in the oil business. As a matter of fact, we were looking in that Wyoming area. And one of the things that I learned is the oldest saying in the book, the best place to look for oil is next to where oil has already been found. Does that old saying apply to your properties?
It does, and that's why we were excited about buying this. There's several pieces here. Our strategy was to buy some in-place production, to do some drilling, to find some pieces that would be good to drill on that already had production, maybe infill drilling, which is what our strategy is. And then lastly, as I said earlier, to sell some acreage to make a profit and pay down some debt, and continue to look for other acreage that we can keep a royalty and maybe do a little of the drilling and go forward. So what we're doing now is we've got property in Kansas, and there's about 5 in what they call infield or drilling. We've got 5 wells, and we're going to do a second well next to each of those. And we feel really comfortable that if we hit the estimates, that our production would be like 5 times 150 barrels apiece. And so that's like the first piece of our strategy to go forward. We're also looking at 3 of our offset wells in Colorado in addition to that. But what I'm really excited about is the opportunity in Wyoming. And I've given you a chart, that we have up that shows where all the horizontal production in Wyoming is in relationship to the wells we have and the leases we have. Chesapeake and EOG and just a lot of the big companies, Hellas Oil, are all drilling in that area. And looking at the chart, you can see right in the middle of all that. So what we're looking for now is either a joint venture agreement or some kind of a drilling arrangement with some of those bigger companies to do a horizontal in our plays there. We believe that will give us tremendous upside and help us grow our company.
Well, now, Don, the company was previously in the gas gathering pipeline business. So what are you going to be doing with the pipelines now?
Well, we bought this pipeline for $330,000 several years ago. The original cost of it was $4 million, and it right now is set up to transport coal bed methane gas, and the price on that is below $3 or right at the $3 range, and economically it doesn't work. We're exploring whether or not it makes sense to convert that over. It's not a big deal to do, to other kinds of high BTU gas, and there's some deep wells in the area, and Devon is doing some drilling within a half mile of where our pipeline starts. It's 5 miles, goes into Fort Union. So we're exploring that. We believe that if we can get up to capacity on that, that's a real nice profit center for us.
Well, crude oil prices are hovering somewhere around $100 per barrel, but they have been relatively stable for the better part of the last 4 years. But with that kind of prices going on, that must be a great time to be in the oil production business.
Well, it is. There's two pieces of that. It's your current production, you get nice pay. Our history since April has been as high as $98.50 a barrel and as low as $74.80. Our valuations that were done by Ryder Scott were at the $70 a barrel level, so we felt real good about the valuation that we had on the property. In addition to that, it gives us a good enterprise value for our property, of our stock going forward, because we think we're undervalued.
Once again, ARET Industries, A-R-E-T. Don, why is this a good time right now for people to take a closer look at your company?
Because, as I talked about our enterprise value a minute ago, it's closer to $4, $4.50 a share, and we're trading, in the 2 range or lower. And we are anticipating nice profits the next couple of years. We plan to do all this drilling. We're looking at joint venture arrangements. We have our financing in place, and we have a nice equity. So we just feel like it's a good opportunity for people that's undervalued.
ARET is the stock symbol, ARET Industries. Don, we're initiating coverage of the company this week, and we'll be watching you very closely over the next several months. Look forward to plenty of updates from you during that period of time. Thanks so much for joining us on the program.
Oh, thank you so much. We're excited about talking to you further. Bye.